Good morning and thank you for joining us. Today I will present the financial results of Mediobanca for the 6-month period ended 31st December 2025. This has been a transitional reporting period, adopted to align with the calendar year cycle. This has also been a phase of material transformation following the change of control of the bank. Our results confirm the resilience, the solidity, and the strategic coherence of Mediobanca. Mediobanca has continued to rely on strong business franchises and distinctive professional capabilities. This quality allows us to prepare for a new chapter in our history, building on 8 years of trust in the Italian and European financial landscape. As we look ahead, investing in our people and in their talents remain a key priority. Their professionalism and dedication are essential in supporting entrepreneurs and families across all their financial needs, from business growth to wealth management. Let me begin with the fundamentals of our asset base. Customer loans reached nearly 56 billion euros. That's an increase of 4% year-on-year and 3% Q-on-Q. Growth was broad-based, strong production in consumer finance and the recovery in CIB and steady progress in wealth management lending. Total financial assets reached 115 billion euros. That's an 8% growth year-on-year and stable in last Q. In the 6 months, group revenues amounted to 1.8 billion euros approximately. They were down 3% year-on-year, but importantly, up 6% Q-on-Q, with all divisions contributing to the rebound. Net interest income was slightly lower year-on-year, but up 1% versus the previous quarter, supported by loan growth and the positive loan book repricing of consumer finance. Fees declined compared to last year, mainly due to softer advisory in CIB, with an unfair comparison to the exceptional results of 2024, and lower upfront fees in wealth management. However, the last quarter showed a clear improvement, with fees up 6%, driven especially by wealth management. The cost-income ratio was 36%, reflecting retention actions and inflationary dynamics. Cost of risk remained well under control at 53 bps, with overlays of 160 million euros approximately still available. Net NPLs stood at 0.8%, with coverage around 60%. Mediobanca confirmed as zero NPL bank. On the bottom line, recurring net profit was 623 million euros. Stated net profit was 513 million euros after roughly 110 million euros of one-off items linked to OPS cost, severance, and devaluations of some stakes. Our CET1 ratio rose to 16.4%, supported by the withdrawal of the buyback, property revaluations, and RWA optimization. We propose a dividend of 0.63 euro per share, up 13% year-on-year. Coming to divisional results, wealth management delivered revenues of 473 million euros, essentially in line with last year. Total financial assets reached 115 billion euros, up 8% year-on-year and stable Q-on-Q. Net new money was 1.4 billion euros, with 2.6 billion euros of AUM inflows in the period. The final quarter saw 1.1 billion outflows, concentrated in private banking, while the rest of the franchise remained solid. The Premier platform continued to expand. TFAs exceeded 50 billion euros, AUM grew 20%, AUA 16%, with consistently positive flows. Our distribution network remains a core asset. Despite a temporary slowdown in recruitment and few not unexpected exits, the network has maintained its commercial capacity and focus, remaining positioned for long-term growth. Overall, wealth management confirmed its role of core engine for the group growth, with a distinctive value proposition of private and investment banking. Corporate and investment banking delivered revenues of 357 million euros. The business remained well-balanced across lending, markets, and advisory, assessing again its leader position in Italy and Southern EU, centered on capital light, advisory services, serving with excellence corporates and entrepreneurs. Net interest income grew 5% year-on-year, supported by higher corporate lending volumes and strong activity in structured products. The loan book returned to growth in the final quarter, confirming solid client demand and disciplined risk management. Fee income was 146 million euros, normalizing against last year's exceptional activity. Lending-related fees remained robust. Markets posted a strong quarter, while advisory maintained a good presence across strategic transactions in our core sectors. Costs remained well controlled, and credit quality continued to be excellent, with a cost of risk of just 5 bps. Net profit was 93 million euros, supported by a 20% reduction in RWAs following the implementation of the new PD model. Consumer finance delivered another very strong performance, confirming Coppa's as leader in Italy, frontrunner in digital BNPL segment, key and consistent high-performing contributor to the group. New loan production reached 4.9 billion euros, up 12% year-on-year. Growth was broad-based across all major product lines. This momentum supported loan book growth, which rose 7% to 16.7 billion euros. This expansion fed directly into revenue growth. Revenues reached 678 million euros, up 6%. Net interest income increased 8% to 600 million euros, supported by higher average volumes and resilient margins. Compass again has been confirmed as pivotal growth engine of Mediobanca net interest income. Cost income and credit quality remain strong. The cost of risk was 175 bps, slightly improving year-on-year. Overlays of 120 million euros continue to provide flexibility as the market normalizes. Net profit reached 221 million euros, up 8%, with return on risk-weighted asset at 3.1%. The insurance division delivered total revenues of 277 million euros, up 13%, mainly driven by the stronger contribution from Assicurazioni Generali. Profitability remained high, with return on risk-weighted asset at 3.8%. As we begin 2026, our first full calendar year within the MPS group, commercial trends remain solid, reflecting healthy loan and net interest income trend in consumer finance and robust franchise and pipeline in CIB. In wealth management, the transition is actively and positively under control by leveraging commitment, brand, and competencies. We will also update the 2025-2028 business plan in coordination with the MPS Group strategic view. In conclusion, Mediobanca has navigated an important transition with discipline and resilience. Our business model remains solid. Our capital position is strong. Our goal, focusing day by day on clients, is clear. We will continue to build on a long-standing heritage of trust, professionalism, and responsible growth. Thank you.